So welcome to NADF's Wednesday webinar series. Today's topic is credit scores. My name is Charlton Thompson. I'm Senior Account Manager here at NADF. There are many topics when it comes to credit. There is credit reports, which goes hand in hand with credit scores. There's debt management, cybersecurity, fraud, and identity theft, just as other examples, but today we're just going to focus solely on credit scores. But first, a little bit about me. I was born and raised in Toronto. I moved to my home community of Rocky Bay, also known as Beanjik, Dewabik, Zagin, and Anishinaabeg, when I was a teenager. I cherish the memories that I have from my time there. I've always thought I would move back to Toronto someday, but every time I go back there, I'm just happy that it's a visit. There's too many people, too many cars. Everybody's always on a rush. But anyways, Thunder Bay has everything that a major city has anyways, and the great outdoors is just a short drive away. I eventually moved to Thunder Bay to finish high school and college. After college, I spent almost 8 years as a First Nations administrator for First Nation. I worked for a First Nation about 3 hours north of here. After doing that job for so long, I was looking for a new challenge, so I ended up at NADF, and I started off here as the collections officer. I spent several years developing the collection program here and cleaning up most of the accounts in arrears. I moved up to account manager, and now 24 years later, I'm now the senior account manager. I think my next title will be elder account manager. Anyways, my primary role is to assess applications for business financing through loans and grants. My first exposure to credit scores and reports was when I first tried to buy a car on my own for the first time. I went to the bank and I got declined. At first, I just accepted it. Oh well, I guess I just can't have a new car. But it bothered me not knowing why. I had a job, I paid my rent, and I paid my bills on time. Why can't I have a car? I don't recall having any financial literacy classes when I was in school, so I had to find out on my own why I was declined. I found out that I had no established credit, so no credit lines, no history, and rent and bill payments didn't get reported to the credit bureau. So those didn't count. So eventually I learned that how to establish my credit and build my credit and maintain it. Then as a collections officer, I reviewed client credit reports and scores to see if a refinance or additional financing was an option for them. It also gave me an idea of what they could pay, what kind of financial situation they were in. I enjoyed helping clients get their credit reports, helping them understand them, and giving them tips on how to improve it or maintain them. And now, as an account manager, for every application that I get assigned, I review an applicant's credit score to help determine if we can give them a loan and if they're likely to repay it. So let's jump in. The topics today that we're going to cover is what is a credit score, how our credit score is calculated, what does and doesn't affect your credit score, and how to maintain and improve your credit score and report. We'll have a question and answer session at the end of the presentation. So yeah, I'll be happy to answer any questions if you have, if I could. So there are two nationwide credit reporting agencies in Canada, and they are Equifax and TransUnion. Both have websites, both have ways you can get to your credit reports. They also have an education pages, so a lot of stuff that I'm presenting here comes from their education pages. So feel free to take a look there. Lots of valuable information. Most creditors, like NADF, report to one or the other. Some creditors report to both, and some don't even report to the credit bureaus. NADF is set up to report to Equifax. A credit score is a three-digit number, typically between 300 and 900, which is designed to represent your credit risk or the likelihood that you'll pay your bills on time. It gives lenders an idea of what kind of a borrower you are. Your credit score is a snapshot in time, and it can be different from Equifax and TransUnion as they use different score models. So if you check your credit score at Equifax, it's more than likely different than TransUnion. They both use different methods to come up with a credit score for you. And the credit score is calculated based on the information in your credit report. The credit report gives specific details of your credit accounts. I don't go into the credit report here, but I do have a presentation coming up next week and where I do touch on credit reports. Here are the 5 levels. So the credit score scale, there's bad, fair, good, very good, and excellent. There is no one way that lenders use your credit score to determine if they will provide you with a loan. You might go to one bank for an auto loan and get declined, but you might go to another bank and get approved. That's because they use different criteria for assessing your credit worthiness. NADF has different criteria than other lenders as well. I like to think that we are more flexible and have the ability to work more closely with clients or applicants. We will use the credit score and other information to get an applicant's full financial picture. So the better your score, so 661 and above, the better interest rate you may get. For NADF, for any scores under 560, it would be very difficult for us to help your application. You would need to fix the items in your credit report that are dragging down your credit score before you'd have to take a look at your credit report and fix the items in there to bring your score back up. A score of 561 to 660, depending on what's in your credit report, we would likely ask for more equity, additional security, or a cosigner or a guarantor. Keep in mind, though, that a credit score, good or bad, isn't the end all that determines whether you get financing or not. As I said, there's other factors that determines whether or not you'll get a loan. Obtaining an applicant's credit score is only one tool in the lender's toolbox. So how are credit scores calculated? There are 5 factors that influence your credit score. So the big one is payment history. Your credit history includes information about how you have repaid the credit you have already have, such as credit cards, lines of credit, auto loans, student loans. So how are your payment history with existing lines of credit that you have? In addition to reporting the number and types of credit accounts that you've paid on time, this category also includes details on late or missed payments, any public record items, and collections information. Your credit history will also detail how many of your credit accounts are delinquent. For example, if you have 10 credit accounts and you've had late payments in 5 of those accounts, that ratio may impact your credit score. Another factor is total credit available versus the balance. A key part of your credit score analyzes how much of the total available credit is being used. So say you have a credit limit of $100 or $1,000 on a credit card. How much of that is being used factors into your credit score. If you're using less than 30 to 50%, that's considered good. But if you're at near your credit limit or over, that's considered bad, and that does affect your credit score. There are 3 different types of credit. So there's revolving. An example would be a credit card. So you're given a credit limit and you have to make minimum monthly payments. There's installment loans, so an installment credit. Those are, an example would be an auto loan. So your loan balance begins with what the loan amount that you took out to purchase the auto. And it's a declining balance with fixed regular payments. There's also open lines of credit, so usually associated with cell phones. Another factor that influence your credit score is credit history. This section of your credit file details how long your credit accounts have been in existence. The credit score calculation typically includes both how long your oldest and your most recent accounts have been open. In general, creditors like to see that you've been able to properly handle credit accounts over a period of time. Another influential factor is inquiries. Public records. So those that have a prior history of bankruptcy or have had collection issues or other derogatory public records may be considered risky. So if you can avoid those, do your best to avoid them. The presence of these events may have a significant negative impact on your credit score. Also, inquiries. Anytime someone's credit file is accessed for any reason, it is recorded in your credit report. However, the only inquiries which may impact your credit score are applying for new loans or credit cards. These are known as hard inquiries. If there are hard inquiries, there are soft inquiries. So if you have an existing creditor that reviews your credit score in order to make an offer to you for a pre-approved credit offer, or if you apply for a credit increase with an existing creditor, or if you access your own credit report, these are considered soft inquiries and they don't count towards your credit score. So hard inquiries affect your credit score, soft inquiries don't. So some of the does and doesn't that impact your credit score. Some of the things that do, so payments, definitely. One of the key behaviors that lenders and creditors typically like to see is on-time payment of your lines of credit. Since this is one of the strongest predictors that you are likely meet your financial obligations. It is generally an important factor in credit scoring models. So this is the most important. Keep your bill payments on time. Credit mix. While there are many different credit scoring models between Equifax and TransUnion, they generally factor in the mix of different types of credit that you have, such as credit cards, installment loans, mortgages, and store accounts. I mentioned the different types of credits there are. installment, revolving, and open. If you have too many of a different credit accounts or don't have a mix of different types, these could impact your credit score. Also, not too many accounts. How many new credit accounts have you opened? Be mindful of opening too many accounts at once and not opening more accounts than you need. Credit scoring models usually look at how many new accounts you have, as well as how many new accounts you've applied for recently. Having too many new accounts may indicate to lenders and creditors that you're taking on a lot of new debt and may be a high-risk borrower. Some creditors call this phishing. So if you're constantly looking for lines of credit, that's what they call it. Age of accounts, age of credit accounts. How old are your credit accounts? In general, creditors and lenders like to see that you've been able to properly handle credit accounts over a period of time. Credit accounts with longer histories showing responsible credit behavior will reflect positively on your credit score. Newer accounts will lower your average account age, which may negatively impact your credit score. So the longer your credit accounts are open and you keep up to date with them, the positive effect they have on your credit score. Newer accounts will lower your average account age, and that may negatively impact your credit score. We have debt to credit ratio. Are your balances high relative to your total available credit? Creditors and lenders prefer to see lower debt to credit ratios. That's the amount of credit that you're using compared to the total amount available to you. If all your credit cards are near your credit limit, for example, this may negatively impact your credit scores. It will impact your credit score if you're over your credit limits. And may indicate to lenders and creditors that you may have too much debt. Negative public records. So do you have any judgments, liens, foreclosures, bankruptcies, or delinquencies that have been reported to the credit bureaus? Having this type of information on your credit history may negatively impact your credit scores. If you have gone through financial hardship and had to file for bankruptcy or having a past due account sent to a collection agency, this negative information may affect your credit score for several years. I mentioned hard inquiries, so applying for new credit does impact your credit score. Things that don't impact your credit score: debit cards. So if you're paying with a debit card or gift cards, using a debit card to access money you already have in your bank account to pay for items won't impact your credit score. When you pay with a credit card, you're essentially borrowing funds to pay back later. With a debit card, no borrowing is involved since you already have the money in your bank. However, activity on a secured prepaid credit card, which are issued by credit card companies, may impact your credit score, or better or worse. Your wages, they don't impact your credit score. A salary cut or a raise may affect your personal or financial life, but they won't directly affect your credit scores. While your income isn't a factor used to calculate credit scores, it's important to note that some lenders and creditors may consider your income when assessing you for a loan, when assessing your loan application. They may also check the amount of debt you have compared to your income. If you lose your job, it is not recorded in your credit report. A job loss will not affect your credit score unless it causes other behaviors. such as late or missed payments, those get reported, and that does affect your credit score. Getting married or divorced, your marital status is not used to calculate credit scores. If you get married, you'll still have your own credit report, and so will your spouse. However, if you and your spouse open joint credit accounts, they will appear on both of your credit reports. And late or missed payments on those accounts can negatively impact your credit score. Filing for a divorce doesn't get reported to the credit bureaus and won't directly impact your credit score. But if you have late or missed payments as a result of getting divorced, that does get reported to the credit bureaus and does impact your credit score. If you apply for credit and your application is denied, this doesn't get reported to the credit bureaus and doesn't affect your credit score. But the application itself may result in a hard inquiry, which of course I said does impact your credit score, hard inquiries. If you get rejected by several lenders, there may be a common factor in your credit history that drives those decisions. High interest rates. So if you're granted credit and you have high interest rate loans or credit cards, that doesn't factor into your credit score. But only if you do have those accounts with high credit rates, high rates of interest, and if you miss or late with payments, those do get reported and does affect your credit score. I mentioned soft inquiries already, what those are. Regularly checking your credit reports is one way to keep track of your credit accounts and to know what information is being reported by your lenders and creditors. Credit scores are calculated based on the information in credit reports. So keeping an eye on your credit reports can help you monitor what may be factored into your credit score. Credit report disputes. So if you see information, so if you got a copy of your credit report and you looked at it and you see something that isn't yours, an account that's on your credit report that isn't yours, or if you see any collections or unpaid accounts and they're not yours, if you report those to Equifax or TransUnion and they look into them, that doesn't get added to your credit report, and it doesn't affect your credit score. But if you do bring that up with them, Equifax or TransUnion, and the information gets updated in your credit report, that information may affect your credit score, for better or worse. Like say they confirm that that there is an outstanding account that is yours, that could negatively affect it. Or if they found that there was fraud and somebody did access your credit without your knowledge, that could be taken off and could actually improve your score. So utility payments, paying bills or traffic ticket on time. So if you pay your bills or if you pay something like a traffic ticket on time, those aren't reported to credit bureaus. Utilities are not extending credit. They're providing you with a service that you pay for. Therefore, paying them on time does not affect your credit score or even falling behind on your utility bills. It doesn't get reported and it doesn't affect your credit score. But keep up with your bills, of course. And same with parking tickets or speeding tickets. If you pay it by the due date, that information isn't reported to the credit bureau and it doesn't affect your credit score. EFSA, RRSPs, tax-free savings account or registered retired savings plans. Moving money out of these accounts or other non-credit accounts, these investment accounts are intended to help individuals build their personal savings. Although there may be tax implications when you move money out of these saving plans, these activities are not reported to the credit bureaus and therefore they do not affect your credit scores. So there's a taste of what does and doesn't affect your credit score. So some pointers on how to maintain and improve your credit score. Review your credit reports regularly. It's free to get your credit reports and your credit score from Equifax and TransUnion. You can access that information on where to get it online. Google Equifax or TransUnion, their websites come up. So when looking to improve your credit score, a good first step is to review your credit reports from both Equifax and TransUnion. After making sure there are no inaccuracies or signs of identity theft or fraud, check to see if you have any unpaid balances or past due accounts that have gone to collections. It's a good idea to tackle this negative information first by paying off as many outstanding debts as you can. Remember that although it's important to pay any accounts and collections, they will still remain on your Equifax or TransUnion credit reports for a period of 6 years from the time they went into collections. Pay your accounts on time. The credit score is based on your history. It's a snapshot in time. So one of the best things you can do to improve your credit score is to pay your debts on time. Keep your accounts up to date. Payment history makes up a significant chunk of your credit scores, so it's important to avoid late payments. If you struggle with on-time payments, consider using automatic payments for your accounts or setting up alerts so you are reminded to pay. For my credit cards and for any payments that I have to make, I have it in my phone, so I have a reminder pops up. I make sure that I keep my payments up to date. Sometimes, like before, I used to forget to make a credit card payment, so now I kind of solve that with adding reminders in my phone that pop up. Apply only when needed. So if your credit union utilization rate is low, keep your credit utilization low. Your credit utilization ratio is the amount of overall credit you have compared to the balance that is reported to the credit bureau. For example, if your credit limit is $10,000 and your reported monthly balance is usually about $3,000, then your credit utilization rate is 30%. It's typically best to keep your credit utilization rate at or below that amount. So 30 to 50,000 of 30 to 50% of your credit limit is typically the best rate to keep it at. Do this by spending less on credit, making more than the minimum once a month monthly payment, or asking your credit card company for a credit limit increase. So only apply when needed. Keep old accounts open. Applying for, when trying to increase your score, avoid closing any old accounts that have been paid off if possible. Avoid closing any old accounts that have been paid off if possible, even if you're no longer using them. One of the factors in credit scores is the average age of accounts. So keeping accounts open can help maintain the length of your credit history. Keep your credit utilization low. So I talked about your credit limit and the amount of credit that you use. So your credit limit, 30 to 50%, keep that low. And that brings us to our final slide. So I guess in summary, if somebody has had difficulty in the past and their credit score has taken a hit, time does heal all wounds when it comes to your credit reports and credit score. The first step is always education. Get to know what's in your credit report, how to get it, what the information in your credit report means, what the credit score means. If you're looking for ways to improve your credit score, how long does it change to see changes in your credit score? It's not an overnight process. The amount of time it takes to improve your credit score varies, but it'll likely require a bit of patience and won't happen right away. Some negative factors are easier to overcome than others. It takes less time to bounce back from one late payment or a few hard inquiries than from having an account go into collections. Just remember, improving your credit score takes effort and patience. There's no one size fits all solution that will change your credit score overnight. I do have another webinar next week. It's on how to avoid collections and protect your credit. In that, I will go into how credit scores tie into the credit reports, how to avoid collections and what to do if placed in collections. And you hear it all the time in the news, data breaches and scams. So how to protect yourself from those? I do suggest getting your credit report from either Equifax or TransUnion at least annually. I do understand that banks and credit card apps provide these as well. But for me personally, I prefer to get my information directly from the source. And if there were any errors in my credit reports, that's who I'd be reporting it to anyways, and they'd look into it and make any corrections if necessary. You don't think it can happen to you, but I did check my credit report once a while ago, and somebody did apply for credit on using my information to somewhere I never applied to. They didn't get any credit out of it, but the application came from an address in Markham. So I did live in Toronto before, but I never lived in Markham. And besides, I only lived there until I was a teenager. But somebody did get my information somehow and did apply for credit using my name. And that inquiry showed up on my credit report. I reported it to Equifax, and they added a note to my credit report that cautions other creditors now to confirm my identity before granting any credit. So you don't think it happened to you, and I have signed up for credit monitoring with Equifax. Getting your credit report is free, but there are other things that you can do that Equifax and TransUnion offer, such as credit monitoring options. I pay $24.95 a month, and then I can access my credit report and score at any time. And yeah, so review your credit report. That's very important. My name is Charlton Thompson again, Senior Account Manager here at NADF. On here is my email address and my phone number. Feel free to contact me if you have any questions that you don't think of right now. Email is my preferred choice, but I'll just open it up for questions now. We need credit to apply for your funding. It does help, but as I mentioned, we don't solely base our decisions on credit scores. If we do check your credit and your credit score is above 660, and then we will help you, of course. But if your score is between 560 and 660, we may ask for additional equity, additional security, or a cosigner. But if it's below 560, more than likely, if I was your account manager, I'd help you access your credit report. We could go over what was in your credit report and how to improve it. But that's what I like about working with NADF. We do our best to work with you, even if you had some difficulties in the past regarding your credit history. We don't have a specific somebody as a credit counselor. There are organizations in Thunder Bay, like Thunder Bay Credit Counseling. They have some people that work specifically in this stuff. What I could do as an account manager, I can point you in the direction and help you get your credit report, get your credit score. I can help you understand, like I've done with other applicants that I've worked with in the past, help them understand what's in your credit report, how to improve it, and stuff like that. So it is part of what I do if you do apply to NADF. I can't hear Ayush, but I'm not sure if I'll be able to hear anybody if you get unmuted. But like I said, my email address is here and my phone number. If you do think of questions afterwards, feel free to shoot me an email or give me a quick call. I don't mind talking credit. I've been through the ups and downs of credit in my personal life, and I've worked with many clients or many applicants and clients in addressing their credit reports and stuff like that in the past. So I don't mind helping out with that.